Hey, family, this is Dr. William Clark here. Wanted to record this quick podcast for you to talk about what fiscal sponsorship looks like. And the reason this matters, it's because a lot of folks have great ideas when they're looking to start and launch their nonprofit organization. And they're trying to figure out what the best next steps should be for their organization or, watch this, for their program. And these programs, they mean everything to you. They inspire you. They are important to you, to your heart, to your purpose, to your mission. And unfortunately, not all programs make it to the next phase of evolution, which includes starting an organization, starting a nonprofit that can properly receive funds. And so it becomes a difficult challenge to make those next steps. Well, all is not lost. I wanted to at least give you some insight on how you can still follow purpose and passion and calling with your nonprofit organization without having to deal with all of the difficulties of running a nonprofit business. Because a nonprofit is a business structure, a faith-based institution like a church, it is a business structure. It is a business. Both are businesses, and they require certain management expectations of you as founder, CEO, leader to follow. And just because you have tax exempt status doesn't mean you're exempt from best business practices. So if you're not looking to go to that degree for your idea, let's talk about ways you can structure your program to still receive funding and resources. The strategy I want to introduce to you is this idea of fiscal sponsorship. So, what is fiscal sponsorship? Fiscal sponsorship is when another entity, organization that is tax exempt, that has the proper recognition from the state as well as the IRS to receive tax exempt dollars or donations. In this case, this entity, this organization, not only can receive tax exempt dollars on their own behalf as a standalone organization, but they can do so on behalf of any organization that falls under their fiscal responsibility through some sort of agreement. Typically, you'll notice that fiscal sponsorships may be provided, or those services may be provided in exchange for a fee. Those fees can range from 1% to 10, 15%, sometimes 20%. And you may be asking, well, why? Why am I paying those dollars to receive those services? Well, the agent or the agency or the organization that's receiving those dollars, they have costs that they are incurring as a result of providing this extra service, right? It costs money to manage finances. It costs money to balance the books. It costs money to raise money. It costs money to process income. Again, as I said at the top of this particular recording here, a nonprofit is a business. It's a business type, it's a business structure. The difference between a nonprofit and a for-profit is that no individual owns a nonprofit. There are no profits that are distributed at the end of the fiscal year. So what makes a nonprofit is if there are profits at the end of the fiscal year, those profits can either be redistributed within the organization to add to its bottom line, or reinvest in programs, or reinvest in expenses that the organization has to incur, or it may decide to give those funds away to another nonprofit. Again, in either scenario, those funds do not get distributed to an individual. Versus a for-profit, if there's profit at the end of the year, individuals, stakeholders, not stakeholders, but stockholders, if you will, co-owners, if you will, of that business get to take a distribution as personal income. So that is the only difference. A nonprofit still is able to make money, is still able to have a profit, is still able to be wildly successful, but how those funds get managed and how they are distributed are directed by the IRS, and they are not owned by any particular entity. So, a couple of things to think about when you are selecting a fiscal sponsor. You want to make sure you're selecting an organization that has experience doing it. The organization has a desire to do it. The organization must also have the capacity to do it, right? So it's not enough to say, hey, I'll help you do this, or hey, call upon us and we'll help you receive those dollars and distribute those dollars. But they also must have the skill set and the in-house controls and ability to do that very thing because they're dealing with your money. You also have to feel like you have to you can trust this organization with your resources, because you will not have your own bank account. In many cases, you won't have your own online collection tools. You won't have your own abilities to receive grants. You're going to be highly reliant upon this particular entity to partner with you to collect resources on your behalf and to distribute them to your organization or your program as you see fit, because you have expenses to cover for your program. Now, a couple of things to think about on how to do this. This comes from experience that I've had with organizations I've led in the past, and how this could work for your organization. Number one, the organization that's your fiscal sponsor could receive dollars on your behalf. So if you're getting individual donations, large scale donations, whatever you may have, those funds will go into the account of the fiscal sponsor, and the fiscal sponsor can either write you checks based upon the agreements that you guys set in place, where distributions are made on a regular basis, and a regular basis could be every 2 weeks, every month, every quarter, etc., whatever you guys agree to. Another option would be it could be a transfer from their account, maybe to a Cash App account, maybe to another type of account that is set up for this particular program and for this particular purpose. In some cases, they may set up a spending account where they transfer those funds to a spending card, and the spending card continues to accumulate dollars. I can't think of a company that does them because I personally don't use them, but spending cards, for example, Cash App could be an example of a spending card that a company may utilize for specific expenses. Amex may have spending cards. Bill.com, if they still have it, they may have spending cards, whereas they would put money on a card and they can create a digital card. I do know some customers of ours, they prefer to pay their bills through Bill.com, where you get a digital credit card number, expiration date, security code, and you put that into your expense account or to your payroll account or into your online collection account. If you are a program and you're doing this with the fiscal sponsor, you can utilize that credit card number to make any expenses or purchases that you may see fit and manage the expenses from there. So that's something to think about. Now, before I wrap this up, I do want to share with you, there's this quick example. So I was the director of a program that had roughly close to $1 million in the bank. This was almost 10 years ago. And it had $1 million in the bank. And we were a program or a collaborative that was fiscally sponsored by a local organization here. We received funds from that local organization as a grant. We also had board members who contributed to those pool of funds. The entity I was leading was a grant-giving institution. We were not standalone, so we were relying upon this hosting organization, which was a fiscal sponsor. They managed our finances. They managed the books. I still had to maintain my own budget, right? So how much money did I believe was coming in? How much money did I believe was going out? And then we balanced the books with the accounting department for accuracy, because as they kept money in accounts for us, I still had to manage my own stuff so that we can sync up on a regular basis what we believe we had and what we believe was coming in and going out, etc., including my salary and the salary of staff and other expenses that we had. It is a successful model if you know how to work it. It is a model also that does leave you connected to or tethered to the entity that's managing your resources, so it can be difficult. However, here's the flip side to this, and this is why it could be a benefit for you. While there are cons to this, such as you won't be able to control your own money. You can't switch monies from accounts here and there. You're at the mercy of the host entity or host organization based upon their accounting principles and best practices. You will have to be relying upon their staff availability. On and on and on. Those are cons. Here's the pros. If you are a program and it is difficult for you to get 501c3 status from the IRS, or it doesn't make sense for you to be a standalone entity, then you can use a fiscal sponsor to start receiving grant funds today. This is hard for a lot of new nonprofits, because when they're starting out and they're in their first, second, or third year, and they're trying to build credibility, they're trying to build trust, they're trying to build the infrastructure, the staff, the whole nine, it is difficult to get major dollars on a consistent basis coming into your new nonprofit organization. So one of the tricks of the trade here is to work with a fiscal sponsor to receive funds with you. There are other strategies too, such as partnering with other nonprofits where you do a split of revenue, let's say a 60-40 split, 70-30 split, 80-20 split, 50-50 split, etc., where the entity with the infrastructure and the maturity and the years in business gets the larger cut and you get a smaller cut based upon the services provided. When they get paid, you get paid like a regular partner. Great. But the other issue is because you are not an entity or a nonprofit, you still need a fiscal sponsor to receive those dollars. So the pro is you have an entity who will be able to receive those dollars. You also will, for a fee, get proper, hopefully, proper accounting support services or budget management services from the in-house operation of that entity. That can make a significant difference because now you're not having to worry about staffing up and getting your own accounting crew going, or you don't have to worry about paying the expense of an outside accountant or bookkeeper, which can add up depending on your budget. But in exchange for a fee, you get all that. And then again, think about this. Think about it as an allowance, right? You get $1 into your organization. Your fiscal sponsor takes 10 cents of every dollar. They apply it to the administrative costs, profitability, their bottom line, any of the expenses that they have as well to provide a service to you and your program. And so when you think about the role of a fiscal sponsor, it can make a significant difference in your ability to be sustainable. It can make a difference in your ability to get off the ground. And it can make a difference also. Here's another benefit. You may not be able to get your own 501c3 designation, but you may be able to get the designation, that particular designation. You can utilize the designation of your fiscal sponsor. So when you're applying for a grant, grants may ask you this: do you have a 501c3 status? If no, do you have a fiscal sponsor in place for said program, right? And that can make a difference in your ability to generate revenue, right? Because now you don't have to worry about getting your own 501c3 status, but you can utilize the status of another organization, therefore making that contribution, that grant, tax exempt. And then after the fees are deducted, you get the cash to operate accordingly. So these are things to think about. I believe that these things can be super helpful for you if you're new to the work, if you're new to the industry, if you're looking to get off the ground, if you have a passion idea that you're looking to make a reality. This can be transformative for you and your program and the customers you're looking to serve. Now, if you have a project you would like to discuss, particularly if you're looking to expand the capacity of your nonprofit and you believe you're ready for strategic planning, or you think you're ready for major grant writing, give me a call and visit me at drwilliampclark.com. Again, it's drwilliampclark.com. I'm glad to speak with you about your project. We're glad to talk with you about how we can help, possibly help you with expanding your capacity. Again, visit me at drwilliampclark.com. With that being said, see everybody. See you next time.